Okay, so this is section 1 of 6 of the QuickBook Online payroll certification. And I think I'll be able to get the payroll certification done fairly quickly because one, I don't need to get into QBO and show you anything like I did with the Pro Advisor because this is based really off of the IRS website and that type of information. So you'll see I quote different sites as I get into this. And I did see quite a few people send me messages like, I don't see it in the training section. And it is kind of difficult to see where the modules are. There's 2 of them in the training section. There's 1 in the specialty courses. But they don't go into depth, and it's all video. So there are some topics they don't go into depth, and they kind of just encourage you to go to the IRS website and read up further on it. So that's what I'm actually doing here for you. For those topics that aren't explored in the training section, I actually went and brought in the information from the IRS website here for you to have in your notes. So make sure if you see my note over here, I said take notes, and at the end, that's where I'll have the sample questions and answers. So take notes on everything here because as you already know, the questions change on a regular basis. So you're going to want to make sure I went over all the topics that are covered in each section. I'm already started 2, so hopefully I'll get 2 out in just a couple of days. Hopefully I can get this payroll certification exam done within like a week or a week and a half. All right, so payroll is the compensation a company must give their employees on a regular basis in exchange for their services. A few companies hire a payroll clerk to complete their payroll process. However, many small businesses don't have the time and or experience to maintain their own payroll records to complete their payroll process. Due to this, many choose to hire a third-party payroll company to take care of their payroll functions, such as Gusto, ADP, Paychex, Deluxe, or even QuickBook Payroll, which we'll get into for sections, I believe, 4 and 5. So those are just a few of the examples. These experts, known as payroll specialists, provide a wide range of accounting and payroll services for small businesses. I went over payroll basics in the video Microsoft Excel 365 Basics 3, payroll templates. I went kind of in depth for half of that video about the payroll process, all the taxes that are, and then also the journal entries. So I would really encourage you before taking the test to look over that video. It's not long at all. So maybe, and just if you want to just look at the payroll section, it's only 10-15 minutes. So please look at that Microsoft Excel 365 Basics 3 payroll template video. It's a good video to watch if you intend to handle payroll as well for your small business. So we're going to talk about employee versus contractor. An employee is someone a company hires and places them on their payroll. Employees must fill out certain forms during the hiring process, and once employed, they receive wages and benefits in exchange for their services, defined in the organization's guidelines and the employee handbook. A contractor is an independent worker who is providing services or goods to the company and gets paid an agreed upon amount, but does not receive benefits such as health insurance or paid time off. Contractors must fill out certain forms for tax reporting purposes as well. And there is one exception, and that's statutory employees. We'll talk about that later. The IRS distinguished the difference between employees and contractors by classifying their work status by 3 categories. That's behavior control, financial control, and relationship factors. So when it comes to behavior control factors, that has to do with whether or not the company trains, directs, or controls how the person completes their tasks. So who's in control? Obviously, if you're an employee, the employer is in control on what you're doing. They're going to train you on what exactly they expect from you. Whereas if you're an independent contractor, you're the one that's probably sitting down and talking about the services that you're willing to provide them. The next one is financial control factors. That has to do with whether or not the company pays wages or a contractual amount. And independent contractors more often incur unreimbursed expenses versus employees get those reimbursed expenses. And employees are normally provided with all the tools and equipment they need, and independent contractors are the ones that have to, provide their own. So for me, I'm an independent contractor when I do my QBO work as a pro advisor. I bring my own computer, I bring my own, if I'm going to bring templates or if I have to print anything out, it's all on me. I have to have my printer and print everything out and hand it to them. So they're not usually providing me with any type of tools, equipment, paper, or anything like that. That's all on me. And then the relationship factor has to do with whether or not the company has a written or signed employee contract or a written and signed independent contractor agreement. The third one, as I said, we'll talk about is the statutory employee. So a statutory employee is an independent contractor, I got this from Wikipedia, under American common law who is treated as an employee by statute for purposes for tax withholding. For a standard independent contractor, an employer cannot withhold taxes. So for me, as I'm an independent contractor, I get a 1099. They do not withhold taxes from me. But there are certain exceptions where you have somebody that still acts as an independent contractor, but can get taxes withheld because they're providing a certain service. And we'll look at those examples. So for an individual to be considered a statutory employee, all of the following conditions must apply. Services must be personally performed by that individual. The individual does not have substantial investment in the equipment or property being used to perform the services. So for like a driver, you're going to be driving a company car. The next one is the services are performed on a continuing basis for the same payer. So you're going to be doing it for that same person on a regular basis. So some examples of persons who may be considered statutory employees are as follows. A driver distributing non-dairy beverages, meat, vegetable, fruit, or baked goods, or who picks up laundry if he acts as an agent or is paid by commission. Or a life insurance agent whose main business is life insurance and annuities for one company. Someone who works from home on materials, by the way, for that last one, the key there is for one company. Third example is for someone who works from home on materials and employer supplies that must be returned and for which the employer gives work specifications. And the last one be a traveling salesperson who turns in orders from wholesalers, retailers, contractors, hotels, or restaurants, either for resale or business use. Work performed must be the principal business activity of the employee. The company, still staying with the topic statutory employees, the company would withhold FICA tax, which is OASDI, Old Age Survivors Disability Insurance, which we just call Social Security taxes, and then HI, which we usually call Medicare taxes. If the statutory employee falls under the following conditions: 1, the contractual agreement states that all services are to be performed by them. 2, the services are performed on a continuing basis, as we said in the last slide. And 3, they do not have substantial amount of investment in the equipment or property that they use. So the main thing is they are getting withheld Social Security taxes, which is good because then they're contributing to Social Security, and then when they retire, they'll hopefully be able to get Social Security, a decent amount. Classifying employees. There are a number of classifications into which an employee might fall. The classifications include full-time, part-time, temporary, on-call, intern, and seasonal. Now, that's actually from my notes that I had from a previous class, but I do see the training section has the following. Full-time, which is at least 40 hours a week with benefits. Part-time with benefits, which is at least 20 hours a week with benefits. Part-time with no benefits, and that's anywhere between 0 and less than 20 hours a week, no benefits. And on-call, intern, and seasonal. So they don't have temporary there. Employees are usually classified based on the hours worked, the expected duration of the job, and the job duties. It is important that companies have a clear policy determining what constitutes a full-time position and part-time position. These classifications determine if the employee is exempt or not exempt. So let's look at that. Exempt versus non-exempt. According to bizhaven.com, exempt and non-exempt positions have several differences. Exempt employees are typically paid salary, while non-exempt employees are typically paid hourly and are then subject to, which we'll look at later, they're protected and made sure that every hour beyond 40 hours a week, they'd get the 1.5 times their regular pay, which would be OT, overtime. That's what this is, overtime. In order to classify an employee as exempt, they must meet the following 3 requirements. The salary threshold. The salary test ensures that the employee is earning a salary equivalent to at least twice the state minimum wage for full-time work. So as an example, they gave you, what if the minimum wage for that state is $13? If it's $13, you'd say 13 times 2 is 26, and then you'd multiply that by 2,080 hours. That's normally how much you'd make in a year. So that'd be 40-hour work week. So 280 times 26 gives you $54,080. So that would be the threshold to make you qualify as an exempt employee. White collar duties. So the employee must be spending 50% of the time completing administrative, executive, or professional tasks. And then the last one, independent judgment. The employee must be able to exercise independent judgment in their role. So the duties test requires an exempt employee to make independent business decisions on a regular basis and or manage or supervise 2 or more employees. The salary test ensures that the employee is earning a salary equivalent to at least twice the state minimum wage for full-time work. Consequences for misclassifying workers. So according to jdsupra.com, if the IRS determines that an individual has been misclassified by their employer, it may levy penalties against the employer, including, but not limited to, a $50 fine for each W-2 the employer failed to file for each employee, a penalty of up to 3% of wages of each employee, plus up to 40% of the FICA taxes that were not withheld from the employee, and then 100% for the matching FICA taxes of the employer. And remember, I discussed that in that video I told you about, so that makes more sense if you've watched that already. If not, we will discuss it later on in another section. Then the state will also determine any state level fines. Misclassifying workers as independent contractors adversely affect employees because the employee's share of taxes is not paid and the employee's share is not withheld. If a business misclassifies as an employee without a reasonable basis, it could be held liable for employment taxes for that worker. In the event a company does misclassify an employee as a contractor, the company can file a VCSP, which is a Voluntary Classification Statement Program application. And when they fill that out, they might be able to be pardoned for some. And so what happens is this is a voluntary program that provides an opportunity for taxpayers to reclassify their workers as employees for employment tax purposes for future tax periods with partial relief from federal employment taxes. To participate in this voluntary program, the taxpayer must meet certain eligibility requirements and apply for participation in via VCSP by filing Form 8952. So there's nothing on the test questions on that. I just wanted to put that in there because I believe I did see it somewhere, but it's not an answer or it's not on as of right now. So I thought I would just have that for your notes. This is only for partial relief. To avoid all penalties, the company must provide a signed W-2 and 1099 for that contractor and be able to prove how they have it, reasonable basis. That's the actual term they use on the IRS. So prove reasonable basis for using that employee as a contractor. So to avoid all penalties, you need to prove reasonable basis as well as provide that W-9 and 1099. Okay. Can an owner hire their own child? So according to the IRS.gov, if the business is a parent, sole proprietorship, or a partnership in which each partner is a parent of that child, here are some of the conditions. So payments for services of a child are subject to all income tax withholding, meaning FIT and SIT, federal income tax and state income tax. So that's regardless of age. But payments of services of a child under the age of 18 are not subject to Social Security and Medicare taxes. If the child is 18 years or older, then payments for the services of a child are subject to Social Security and Medicare taxes. However, payments of the services of a child under 21 are not subject to FUTA, which is the federal employment tax. If the child is 21 years or older, then payment of the services of the child are then subject to FUTA. And then I put a little note here, again, not on the test, but I really think you should put this in your notes because I think it's something they can add later. Wages paid to a parent by their child are not subject to FUTA. So this is if a child is paying their parent, they're not subject to FUTA. Okay, so owner's payment. So here are the different types of business ownership. You have sole proprietor, and they would take a withdrawal out of the business. So they would not be able to have, be a salaried employee and get a W-2. So neither would these other two, single membership LLC or multiple member LLC. These all have different ways of getting paid. And then with these two, you would do several Schedule C or on your 1040. So you'd fill out a 1040 and then you would link it to your Schedule C. Down here, the C Corp and the S Corp, they are able, as ownership, you are able to be a salaried employee. And so you can get a W-2. And I put over here, you can see C Corp and S Corp owners can get paid a salary. And then here's a note, health and accident insurance. So this is for these. So for anyone who works for a C Corp or S Corp as an owner and they're getting paid and a paid salary and get a W-2, this is a note for them. So health and accidents insurance premiums paid on behalf of the S Corp shareholder employee or C Corp are deducted by that corporation and reportable as wages on the shareholder or employee's form W-2 box 1. So remember, the box 1, that's your federal, that's what can be taxed for your FIT, your federal income tax withholding. So whatever monies that employee had the company contribute toward either health benefits or accidental insurance premiums, you have to add that in as wages. So let's look at the Fair Labor Standard Acts. And this is coming from DOL, the Department of Labor.gov. The Wages and Hour Division, which is a department within the Department of Labor, enforces the Fair Labor Standards Act, FLSA. So for now on, I'd like to say FLSA. And that department establishes minimum wage, overtime, payroll record keeping, and youth employment standards affecting employees in the private sector and in federal and state and local governments. Covered non-exempt workers are entitled to a minimum wage of no less than $7.25, which went in effect as of July 24, 2009. They've been talking for years. I thought Obama was going to get to increase that federal minimum wage, but it never happened. I don't know when it's going to happen. It needs to happen soon. Overtime paid at a rate can't be less than 1.5 times the regular rate of pay, and that has to be in effect as soon as the employee made over 40 hours within a work week. The act is maintained and carried out by the Wage and Hour Division. Note, there are still, this is unbelievable, there are still 5 states that adhere to the $7.25 federal minimum wage. And there's 45 that have increased it. So what happens is state takes precedence. So I'll give you, for example, and it could be municipalities as well. So I know New York City, because I'm right here, their minimum wage is $15 an hour. So that means anyone that lives within or works within New York City has to get paid at least $15 an hour, because state or local municipalities supersede the federal. Exempt employees receive overtime at 1.5% their regular pay past 40 hours a week, and a standard work week would be 7 consecutive days of 24 hours, which equals 168 hours. The work week can begin on any day in any hour selected by the company. So again, the standard work week is 7 consecutive days of 24 hours, 168 hours total. So permissible farm labor. So when it comes to agricultural jobs, there are some leeway with children. So I'll just leave this here for you to take a picture and read. But it's just saying, you know, the regulations or what's permissible as far as if you're under 12 years old and working on a farm, 12 to 13, 14 to 15, or 16 and older. Okay. And then here we have child labor provisions. Again, from the training section, you have 14 and 15-year-olds. These individuals can work outside of school hours in various non-manufacturing, non-mining, and non-hazardous jobs for a limited amount of hours. 14 is the minimum age for any non-agricultural work. 16 and 17 years old, these individuals can work at any non-hazardous job for an unlimited amount of time. And then you have 18 and older can work whatever. And again, there could be state or local rules as well that could possibly supersede. So it depends on the area as well. And these are the above restrictions for 14 to 17-year-old employees. And if you can't see it, it is in the training section. All right. So now the process of hiring. This is where we begin it and we end it in section 2. So employer record keeping. So according to the Department of Labor.gov, the FLSA provides a listing of basic records that employer must maintain. Here are the most known records. So you can see that here. Their full name, social security number, address, and so on. You can take a picture of this. It's also in the training. Also, according to the Department of Labor.gov, this is all off mostly governmental websites, employers must maintain basic record keeping of the information shown in the previous slide. How long does an employer need to keep those records? The FLSA requires that the employee file records must be kept by an employer for at least 3 years. Records used to compute pay should be kept for 2 years. And that would be time cards or schedules or any type of additions or reductions in wages. But they need to keep it for at least 3 years because think about it, the IRS can decide to audit you for up to 3 years. So they might need to reach out to the company and get there. We will revisit this in section 2, by the way, but this is Form I-9. That's something once somebody is employed, the employee needs to fill this out as well as provide documents to show that they're eligible to be employed in the United States. The next pre-employment tax form would be W-4. We're all familiar with these. Again, we'll revisit this in section 2. This is where you would determine what the employee's FIT rate is because they'll put on how many exemptions they have and whether they're married or not. And then here are default hours by pay period. So before processing payroll, the employer must determine what the pay schedule and work week will be for each employee. Typically, most businesses do not have more than 2 pay schedules and variations over the work week unless they have different sections. So they might have, office workers, sales worker, manufacturing workers. That's different. But if it's basically everybody's on the same type of schedule, mostly everybody would either be, bi-weekly or it could be weekly. Those are the most common. So weekly, bi-weekly, or semi-monthly. I actually have been paid semi-monthly quite a few times. And these are the default number of hours. So this would be after these hours is when you would start getting your overtime if you are an hourly pay. And how you get this is you divide it by the number of pay periods. Because if it's bi-weekly, there's 26 pay periods. If it's semi-monthly, it's 24 pay periods. All right, and then calculating gross wages. Remember, I went over it with the video. I told you how to do this. But hourly wages, you take your hourly rate times the number of hours worked. That would give you your gross pay, and then OT could apply, if they went over 40. And salary wages, you have your annual salary divided by the number of payments that will equal gross pay. And OT may also apply because I used to do taxes years ago. I've had, people who are in salaried positions, and they would get overtime. Let's say after in their contract, it would say like after 45 or 50 hours, then you would get overtime. So if you're a salaried worker out there, I definitely would, before signing a contract, make sure that's added in there. You don't want to be working 60 hours a week and not getting that extra 10 hours of overtime that you should be getting. And this is my last note in my lecture section. The Labor Department officials recognize that in some industries it is common for employers to record the starting and stopping times of employees. So that usually, I think this is more for manufacturing work. So these are the 3 criteria that they use to identify what the starting and stopping time would be. It would be to the nearest 5 minutes, or the nearest 1/10, or the nearest 1/4 of an hour. So it's either 5 minutes, 1/10 of an hour, or 1/4 of an hour. Labor Department officials accept a rounding provided by that is used in such a manner that it will not result over a period of time in failure to compensate the employers properly for all the time they have actually worked. So there's actually been a lot of lawsuits here in the last, I say, 2 decades over that, over them doing calculations where they, on a consistent basis were taking, 10 minutes here, 15 minutes there to, and so I don't know if any of you have worked at, like, I know Walmart, a lot of those kind of places actually ended up having to reimburse their employees years later because being found guilty of that. So here are some of the sample questions you might see. If an employee is working 25 hours or less per week, how should they be classified as what type of employee? The answer would be part-time. When determining if an employee is classified as exempt or non-exempt, what factors should be considered? The numbers of hours worked, the amount of money earned, and the type of work performed. When determining if a worker is classified as an employee or a contractor, what factors should be considered? The type of relationship, the financial control, and the behavioral control. I like to use me in examples, so I will be doing that for this payroll section. A company hires Nicole, the business instructor, to handle the training of office staff in QBO, the new computerized software application they'll be using. She will be paid an agreed-upon flat fee. How should she be classified? As an independent contractor, because I'm not an employee and I'm not a statutory employee. So I'd be an independent contractor because I'm coming in, I'm doing a job, I'm getting paid a flat fee, and then I'll be leaving. Next question. What could be said about the repercussions of misclassifying employees as contractors? The penalties may be decreased or negated if there's a reasonable basis for treating workers as contractors. So that's that term again, reasonable basis. As long as you have a reasonable argument as to why you made your workers contractors, then maybe your penalties can be decreased or negated. Under the FLSA, a non-exempt employee is best described as employees who must be paid overtime. Because remember, they're protected with that 1.5, 1.5, whereas the salaried employees, the exempt employees, are not necessarily, depending on their contract. Here I am again. Nicole, the business instructor LLC, is taxed as an S Corp. As the owner, I take a wage of $2,000 per week. I also participate in the group health plan, which the company pays 50% of the employee's premium. So when my employees get paid every paycheck, my company matches theirs. So if they pay, 100, I match their 100. So in this case, if you see, my personal premium is 200. So I pay 200, and then the company, the corporation, pays 200. What amount will I see for federal wages on box 1 on my W-2 at the end of the year, assuming I've worked from January 1st to the end, so the whole 52 weeks? You would see $104,000 in my wages plus the $2,400 for health plan benefits. So let me explain how I got that. So I'm getting $2,000 a week, correct? So you would take the 2,000 times 52 weeks out of the year, and that gives me $104,000. So I made $104,000 for the year. But on top of that, if you remember when we talked about the S Corp and that they can get a salary, the one thing was when it comes to health premiums or insurance premiums, you have to put that as your wages on box 1 of your W-2. So we have to take this $200 and multiply it by 12 months because I'm paying $200 a month and the corporation's paying $200 a month. So that's corporation's contributions are $2,400. I need to add that to the box 1 on my W-2. So hopefully you understand this answer. What 2 business entity types can a salary be paid to the owner for work performed? C Corp and S Corp, and then also LLC that might be taxed as an S Corp. So as long as there's S Corp or C Corp in there, that would be the business entity where you can get a salary. Which 3 employment practices are regulated by the FLSA? Minimum wage is regulated, overtime, and employment of minors. What agency under the U.S. Department of Labor enforces the FLSA? Well, I mentioned that earlier when I talked straight out of the DOL.gov site that I quoted. That was the Wage and Hour Division. How many years are employers required to keep employee records? That's the wages, hours, condition of employment under the FLSA. 3 years. They need to keep it for 3 years because I was saying, remember, when you get audited by the IRS, they could go back 3 years. So obviously, they wanted the company to have that information for them. How many states still follow the federal minimum wage? I was shocked by that. 5. 5 states still employ that $7.25 an hour. Under the FLSA, what does a work week consist of? Any 7 consecutive 24-hour period. If a company is a single member LLC, taxed as a Schedule C, so remember Schedule C means you cannot be paid as an employee, that has 3 employees and the owner who also works for the business. Who is included in the payroll process? So when you go through Paychex or ADP and they're giving you your paychecks, the owner should be processing only 3 employees, and they're going to do a withdrawal or draw for themselves because they cannot be, since they're doing a Schedule C, they cannot be a paid employee. A statutory employee receives a W-2 with Box 13 checked and then reports his earning and business expenses on Schedule C. What 3 individuals would be classified as a statutory employee? It could be a person that is selling full-time various life insurance policies, a person that's, let's say, delivering beer to a grocery store and is paid on commission, or a person who travels to restaurants all over a state selling coffee machines. What is the minimum age for minors that are not working in an agricultural setting? That'd be 14. Your client asks if they can hire their children to work in the business and not have to pay taxes on their behalf. What circumstances would this be true for? Well, I gave 2 examples. 1, if the client is the sole proprietorship, has a sole proprietorship, and they hire their 16-year-old child, but still will withhold federal and state withholding, because remember, it doesn't matter the age, they still have to pay their federal and state withholding. Or if the client has a single member LLC and reporting on a Schedule C, they can hire their 19-year-old child, but they need to withhold Medicare, Social Security, federal, and state withholding. Because remember, it says once they turn 18, they have to then be charged Medicare and Social Security, but not FUTA. FUTA doesn't get charged until 21. What federal agency regulates the federal minimum wage? That's the U.S. Department of Labor. What are the standard default hours for a full-time employee paid biweekly or semi-monthly? That was that table I have. I hope you took a picture of it or wrote it in your notes. Biweekly is 80 hours, semi-monthly is 86.67. What are approved the Department of Labor rounding methods? So remember, I gave you those 3. There's the nearest 5 minutes, the nearest 1/10 of an hour, or the nearest 1/4 of an hour. So in other words, if they gave you a question and said, is it a half an hour, rounding to the nearest half hour? Well, no, that would not be considered an approved method. It's only these 3. So have those 3 in your notes. Those are the only 3 approved methods. And that concludes it. So I just went over a half hour. I thought this was going to take a half hour. Honestly, I do think I can get the payroll videos out quickly. I know a lot of you are asking me about them. I'll try to get section 2 out in the next day or 2. All right. Thank you for watching.